Assalamualaikum everyone. Good afternoon, ladies and gentlemen. Please have a seat at the back so we can start this presentation and session rather, not presentation, but this panel session. It's on Insurtech, and these are buzzwords maybe, but it's really part of the overall what we call the fintech landscape and the ecosystem. Insurtech is simply a sub-branch of that fintech world. I don't know, the session is called the Emerging Challenge for the Takaful Industry. I would call it the Emerging Opportunity for the Takaful Industry. We heard this morning from Alberto that this industry is now stagnant, which I do not disagree with him on terms of the Islamic banking and Takaful. And I think it is about time that technology could be the catalyst of change for this industry, and I think that could help us to leapfrog into another space altogether. We'll hear more about it. Very briefly, we have Mike Harris, founding partner from Monument Partners. He will introduce to you the rest of the panel. And we also have Mr. Ali Murtaza, who is a manager from Centegy Technologies and one of the sponsors of the event I noticed on the screen there. So I think the whole sector of fintech is around $150 billion, growing pretty fast. The UK is one of the leading hubs in Europe. I've also been to Berlin recently to attend a couple of events, and I found that Berlin also has a lot of activity in the fintech space. And then, of course, there are other centers like Paris, Luxembourg, and Switzerland, all vying for the same part of the overall pie. But outside of Europe, I think the centers which I've also visited are Hong Kong and Singapore. And fintech is not just a buzzword. It's going to happen. It's a bit like when we had the Sharp calculators arrive back in, or Sinclair calculators arrive in 1970. We were thinking that this is just a passing phase. Then we saw the heavy-duty laptops arrive in not laptops, but the heavy-duty computers arrived in 1980, if you like, and we thought this was a passing phase. So fintech is definitely not a passing phase, and without further ado, I will now pass you over to Mr. Mike Harris. Thank you. Mike, the floor is yours.
Thank you very much. Good afternoon. I'm going to give a short keynote, at least short for me. And then when I've finished, I'll introduce the immediate three people on my left, who are members of the panel, who will further illustrate some of the points I'm going to make in the keynote. And then let me get on to the right slide, if somebody could do that for me. Yeah, just give me a second while I change the slides. So we'll bring the three people immediately on my left to further illustrate some of the points I'll make in the keynote. And then Ali on the end there will come in at the end to say something completely different, as far as I'm aware. Let me kick off while I'm waiting for the slides to change, and hopefully they'll catch up with me. There we go. Very good. So I was very pleased when Iqbal invited me to speak here today, despite the fact I know very little about Islamic finance, and actually not much more about insurance. But don't stop listening just yet. So I think I may have something interesting to say to you. You see, I've spent most of the last 45 years trying to drive the digital transformation of banking, one way or another. I've done it as a system designer for a major bank. I've been IT director for a major bank. I've been chairman of the innovation board for another major bank. I've been the founding CEO of two challenger banks built on digital models. I spent from 1996 for 14 years, many weeks, at the Sloan School of Business at MIT, where together with the faculty and the students, we were trying to unravel the dynamics of digital transformation of industries. And I've spent the last 15 months looking into the future of financial services as it responds to this fintech explosion. The whole of financial services, wealth management, banking, insurance, conventional and Islamic. So I've learned something about your world in the last 15 months, just something. Now, let's take a look at the future. A word of warning, a health warning to start with. The most important lesson I've learned in 45 years is the future stubbornly refuses to be predicted. It doesn't happen the way we think it should, the way the think tanks say it will. It doesn't happen in a straight line. And politics have given us a great example, a great illustration of this in recent times. Look at these few faces here. Trump, Macron, Corbyn. Now, who would have dreamt 8 years ago they are where they are today? Who would have dreamt it? Even 3 months ago for Mr. Corbyn. And this is the way the future is created. It is not by prediction, it is by individuals coming out of the blue and doing something completely unpredictable. Now, I'm using Tim Berners-Lee here, well known to me and one of our panelists, as a proxy for the giants of the digital age, the people who created it. And who would have thought that a shy young physicist, who nobody had ever heard of, would be behind the most impactful creation of mankind, as I've heard it described. The World Wide Web, this, of course, changed everything for everybody. And Tim, unknown before he created that, came completely out of the blue to create a new future for all of us. And this is true of all of the great giants of the digital age. You pick one and I'll tell you nobody had ever heard of them until they changed the world. So the future, we cannot say what the future will be, but we can say precisely how it will be created. That we know. Just a few industries here that have been blown to bits by the digital revolution as they've washed over it. In the center there, the computer industry, first one to fall, almost taking IBM with it, certainly changing it forever. Top right, the empty shopping malls in the USA as Amazon Prime gets 70% of the population shopping from home. Bookshops, they went pretty early. That was down to Amazon as well. The whole media business, gone from broadcast shared experience to on-demand, device-led. And a field I also operated in, telecommunications. Actually, a great analogy for financial services. I remember I was chief executive of a telco when the internet burst onto the scene, or rather the World Wide Web burst onto the scene in the early to mid-90s. We had great plans. We were going to be the leaders of this brave new world. After all, we owned all the transmission. We owned all the customers. We could build all the services. We could make sure they all bought everything from us. We were going to do the lot. And what happened instead is the telcos, hamstrung by regulation and capital requirements and the need for predictability and security, ended up highly regulated utilities around which an ecosystem of innovators developed. Sound familiar? Maybe where the banks are going. Okay, so every one of those industries was transformed digitally in the same way. The first thing you notice is the appearance of the brave pioneers. Or as the gurus at MIT would say, if you want to know when your industry is about to transform, look out for new company formation. There's normally an explosion of new companies coming onto the scene, all challenging the incumbents, all saying they've got a superior business model, all thinking the incumbents are easy to take and will fall like a house of cards. Talk of the incumbents as dinosaurs. The story is great. They attract huge amounts of funding from people, some of whom should have known better. Funding leads to hype. Hype leads to overvaluation. That leads to more funding. And incumbents say, what a load of rubbish. It's never going to last. Then there's enough money goes into it that at least some of them get traction. And the incumbents start to worry and start to build options and strategies to deal with this new wave. And then it all bursts in one massive big bubble. The pioneers get arrows in their back. The incumbents start to relax. Yeah, we were right. There was really nothing to worry about here. Companies join the 99% club. You know what that is. They lose 99% of their value in less than a year. Last seen in the dot-com boom. Now being seen in fintech. And it seems like everything's gone quiet. But in fact, what the pioneers have done is taken the territory that the real world-changing entrepreneurs then occupy. So I call the world-changing entrepreneurs game changers. They learn from the pioneers, and they come in and do something spectacular. And that's when real change happens. Now, I was a pioneer once. That was when I was in telecommunications. And at Mercury, we pioneered prototype 2 devices, one of which you'd recognize as today's smartphone, the other as today's tablet. We were about 15 years too early, maybe 10. We had great collaborators. We had Apple with the Newton, and we had Nokia with the phone. And Apple were entirely enthusiastic. Nokia were till he got to the chairman, who told me, young man, I was young then, young man, you will end up with arrows in your back. And he was right. And Nokia regarded the smartphone as rubbish and relaxed. They shouldn't have done. The particular game changer coming out of the blue at Nokia some years later was a young man called Stephen Jobs, who wasn't at Apple when we did the prototyping with the Newton. He'd been turfed out. But he came back, and as far as the telecoms industry and the music industry come to that are concerned, he came right out of the blue at them. They did not see him coming. And in fact, the Nokia engineers, when challenged, why haven't we got one of these, said it's not possible. You can't build a device like that. And we'll buy an iPhone, we'll show you it's fake. It's all been faked. Then they got the device and thought, oh my God. And that actually was the end of Nokia. So that's what game changers do. They come in the second wave, they learn from the pioneers, they come with the market insight, and they are the people who change the world. You don't see them coming, so he's trying to predict it. Here's a few game changers. My two big successes. First Direct wasn't the world's telephone bank, world's first telephone bank, but it literally was the only one that worked. And Egg was in the second wave of internet banks, but it shot through 1 million customers while the first wave was struggling to get to 5 figures, and then went on to 5 million and more. And I haven't got time to tell you about the insights that led to them being successful, whereas the others weren't, but I could if I had another hour. And then here are some of the giants of the digital age. Microsoft, I remember when that emerged. I was in software at the time. There were 40 or 50 people competing to create PC operating systems for the new wave of PCs. Microwave was not a Microsoft was not a pioneer. Microsoft was a game changer. Google was the second wave of search engines. Facebook, not the first social network. In fact, the first one was owned by Rupert Murdoch, called MySpace. And Apple, a pioneer in computing, was a game changer in consumer electronics eventually. So it's mostly the game changers. The odd pioneer does come through and is successful, but I've looked at research at MIT, and 9 out of 10 apparently successful pioneers go on to fail. Now, this is playing out in fintech as we speak. We've had a lot of pioneers. They're beginning to get arrows in their back. If you look at all the commentary, it is, these guys were so naive. They were trying to build big customer bases on 20 million worth of capital. It takes more than that. The regulatory bind that the challenger institutions have got themselves into means they need massive scale before they can really compete, and it's almost impossible to build that. Unicorns are falling to earth. We are through the pioneering phase. It is time for the game changers to enter the stage. It's perfectly set. And in my view, the insight I think has most resonance in banking is that we've got a dysfunctional trade-off between growth and stability in fractional reserve banking at the moment. They're only stable because they're hampered by the amount of capital they have to hold and the regulation tying them down into what they can and can't do. I was amused to see the chairman of the UK Regulatory Authority today to say the banks are up to their old tricks. What he meant was they're deceptively trying to increase leverage and put stuff off balance sheet with derivatives and loosen their credit criteria. Of course they will. They're under immense pressure to get somewhere close to returns that come anywhere near their cost of capital. They're under pressure to drive growth in the real economy. Of course, this is just not sustainable. But if we let them off the hook, guess where that's going to end? So I think we'll go in the same direction as telecoms. We'll end up with highly regulated, stable utilities with an ecosystem of innovation around them, which drives growth and drives cost saving and drives regulatory compliance and drives fraud prevention and all that stuff that is critical and dominates the agenda of every bank chief executive I've spoken to. The real game changer here is banks are open to that now. They never used to be. They're open to partnering with innovative entrepreneurs. They're open to using cloud-based solutions. That changes everything. It means you can build solutions at reasonable cost. You can scale them quickly. You don't have to get stuck in the bank's IT pipeline. If the banks are smart and the entrepreneurs are smart, you can do it much more quickly than that. And one of your speakers here, Andy Thomas, and I built a company not so long ago that was exactly in this space. And so it's a space we know well, and we think this is going to be a really interesting area for fintech. And we see a lot of opportunities in the Middle East and Asia in both Islamic and conventional finance. The research we've done says they're open to it. They've got a lot of young people in their markets. There's great smartphone penetration. It looks very good. And my team yesterday said, what about Africa? I said, yeah, sorry, forgot to put it on the slide. So we've got Middle East, Asia, and Africa as well there. That's banking. Insurance, which is the topic of this conference, of course, and the three people I'm about to introduce to you will indeed talk about this. Same thing, cloud-based solutions to incumbent insurance companies, Islamic and non-Islamic. The opportunity I see is for new products and services which provide a greater level of engagement for insurers than they currently have. Right now, you engage customers at renewal time, and when they have a claim, that's it. They then forget about you. What if you could engage them every day of the week? That'd be nice, wouldn't it? I think new forms of risk assessment, risk modification and risk monitoring, I think is a big thing for insurance in general, moving from historical analysis of data to try and price risk more to measuring risk in real time and enabling customers to modify risk as well. I think that's very big. I think insurers, every insurer I've ever spoken to said it'd be great to live in a world where there were less claims and each claim cost us less. In the particular world of cyber security and digital crime, I think we've got something to say about that. So I will introduce these other companies in a minute. But for me, I think this is a very exciting time. We're seeing I've been trying to drive digital transformation in financial services for all my career. Now I finally see it's going to happen, finally. And when you see something that exciting, you have a choice. I've been in the stands in the last 18 months, looking, watching, commentating, writing blogs, researching, being wise, usually after the event. Or you can be on the pitch, you can play, you can actually get out there and make something happen. You know what, I'm a bit too old for that right now. If to use a football analogy, I can still see the killer pass, but I can't make it anymore, let alone get up and down the field. So the best place to be is in the dugout. So in the dugout sits the coach. The coach, the mentor, the investor dramatically changes the game on the pitch. That's where I've chosen to sit with a bunch of partners. So the way we're going to do that is to create a sustainable finance fintech fund based in London, building and proving the sort of opportunities I spoke to here, funding and proving them in London, scaling them in the Middle East, Asia, and Africa, and the underdeveloped emerging economies. I call it sustainable because a big lesson I learned from my failed attempt at pioneering was you need an agile business architecture, you need an innovative culture, you need a high-performance leadership team, and you need very smart risk management if you're going to build sustainable value in this field. And I've spent the last 5 years, I spent the rest of my career after failing as a pioneer, building architectures like that. And I've spent the last 5 years teaching other people how to do it in a highly structured mentoring program called Iconic Shift, which we can bring to bear to help build sustainable fintechs through this fund. They also need to be sustainable because I think it's a greater than 50% chance we will see another financial crisis within the next 10 years. So we have to have companies that are anti-fragile to that prosper from it, that can get through it. It's partly agility, it's partly smart risk management, it's partly just knowing it's going to come. It'll either come because the banks persuade the regulators to let them off the hook or get there deceptively and provoke a banking crisis, or as governments wind out the quantitative easing that they're doing at the moment and deal with the fatigue around austerity by loosening the public purse strings, we could have a government-led financial crisis. So we have to assume we're going to have one sometime in the next 10 years. Most fintechs I've seen will be blown out of the water, stone, dead, and no return once that happens. So we have to make sure we build them that can get through that. And we're also talking about societal sustainability here. I don't think a banking system that is so constrained at the moment is sustainable. I'll just give you an illustration of that. There are 6 million SMEs in the UK, approximately. 10,000 of them create 59% of all new jobs in the UK economy, just 10,000. It's interesting if you ask the people in those 10,000 what help they got from the financial services industry in getting there, and you don't get a very polite answer to that normally. And I just wonder if we could reach out a little bit and have products and services that really help SMEs with growth potential. Just how many new jobs and how much societal growth and cohesion we could actually produce. And that's a real focus for us in this fund. All right, so now then back to insurance. Here's what we're interested in. I got 3 people to introduce. I'll introduce them one at a time. Leap back up and introduce the other. Leap back up and introduce the other. Let you come back and introduce Ali there, because I have no idea what he's going to talk about. I know what the other's going to talk about. So my first person I introduce here, these are all companies I've been working with in the past few months. Chris Gilbert, who is chairman of a company called MIRACL. Chris will talk to you about MIRACL. And from my mind, and Chris will probably say something completely different now. But to my mind, the relevance to insurance is this is a game-changing breakthrough approach to reducing the costs and incidence of claims related to digital crime. We will see if that is indeed what he said.
That's what Mike thinks I'm going to talk about. We'll do a little comparison. So one of the things I'd like to do is make it very real, cybersecurity, because cybersecurity and insurance at first face, when I got the invitation to come and talk, actually don't really intersect very well. And then I started reading a little bit, and I discovered actually you people should be very, very, very concerned indeed. Because if you think it's been bad with cybersecurity, with the break-ins that we've had in the last 2 or 3 years, it is going to get much, much, much worse. And it's not just your companies, but it's probably more importantly the companies that you're trying to insure. These companies are at risk like never before. And I'll try and bring it to life with a few sort of anecdotes, if you like, of what's actually happening. My background is in telco, just as Mike's is. I was in Motorola. I used to... many of you will not remember Motorola because it's defunct now. But in my day, I was Europe, Middle East, and Africa, the effective CEO of it. So many of the countries represented here today, I was putting in your telco systems. 20 years ago, 25 years ago, when I was doing that, I was at the same time creating links by law of each of the individual countries to the security services of each of your countries to give them access to your data, your telephones, your telephone calls, your data calls, your SMSs, everything you do. So the sad fact is, every single phone call that you people have made, and I have made in my life over a cellular phone, every data call, every SMS has been recorded by the security services by law. We should be worried about that. We'll come back to that in a second. Let's just think a little bit more personally for a second. Can I just have a quick show of hands? How many of you think they've got 50 passwords? How many people know that they've got more than 50 passwords? I guarantee you've got more than 50 passwords. But I guarantee many, many of your passwords are the same for different places. I'll tell you from now, my Google password is the same one as I use for my bank. Why? Because one of them makes me change every month. And if I change that one every month and I don't change the others with it, then I lose track very, very quickly. So as a consequence, unfortunately, there are now massive break-ins because of people like me doing things that people like you do as well. We use the same password, we never change it, and because of that, there are these massive break-ins. The biggest one probably that people know here is the Yahoo break-in that happened about 2 years ago, or at least we found out about it 2 years ago, where 1 billion usernames and passwords were stolen in one swoop. Now, the world's only got 7.5 billion people in, so 1 billion in one go is quite dramatic. Now, if you don't know it's happened and you've used the same password elsewhere, then, of course, whoever did that hack then take it to the next company, in my case, to my bank, and clear out me. So at an individual level, this is a pretty serious problem. Statistics say that in the last 3 years, there have been 6 billion usernames and passwords stolen. There are only 3.2 billion people that have got access to the internet. So on average, you and I have lost 2 usernames and passwords in the last 3 years. That's a pretty serious problem. The bigger problem, though, is not us as individuals. The bigger problem is the attack on these large companies, because it's not really useful for a hacker to come and take your password and try and hack your bank, because even if you're a very rich man, you're not going to be as rich as all the people in Google or all the people in Yahoo. And so they do what's called a smash and grab attack. Smash and grab attack is where I attack, as a hacker, I attack the central database where your usernames and passwords are stored. And in one foul swoop, I take the lot. 2 forms of smash and grab. There's a technical attack, which people get a lot of write-up about because it's quite interesting how these technical attacks happen. The second one, which is more prevalent, and this is the one you should really worry about, are done by insiders. When we say Google is responsible for our usernames and passwords, who is Google? Who are the people in Google? Google is a very, very big. I know quite a few people in Google. They're very good people. But somewhere in the Google organization, somewhere in the Yahoo organization, somewhere in Barclays Bank, there will be people that want to give this information away or use it for their own purposes. It's impossible to have a company that is 100% pure and is going to protect that set of data. So this smash and grab world is the world which my company has been trying to take care of. And we're trying to do it as quickly as possible because we know that the next level of problem is just around the corner. Many of you would have read about the Russians reportedly breaking into the US and the political system. It's quite funny for me inside the cybersecurity world to read that because the Americans are all getting upset about the Russians doing it. Well, the Americans have been doing it to the Russians and everybody else since goodness knows when. The British are very good at this. The South Africans are very good at this. The Australians are very good at this. And now, for the first time, it's coming out into the open that nation-states, no longer companies, nation-states are fighting with each other at this cybersecurity sort of level and are taking out huge numbers of usernames and passwords. In the cybersecurity internal world, the most exciting example of this is when the Office of Personnel Management in the US was broken into. It was about 4 years ago, where in this case the Chinese government caused all the security details of every CIA person, NSA person, federal government type person who's involved in security in general. All of their information was taken in one foul swoop out because there was a break-in at a username password level. Pretty horrific, pretty horrific. And again, I come back to you as individuals, when every single cell phone, every SMS message that you've ever done in your lives is available to these nation states, I would say as citizens, we ought to be really, really worried about it. As insurance companies, you should be worried about it in your own company because not everybody in your company will be perfect either from a moral point of view in giving access to hackers to this information or alternatively be making mistakes internally that allow access to their databases, security databases anyway. So one way or another, the likelihood is that 80% of your companies will be hit by some form of cyber attack in the next year. That's what the statistics show. In the financial industry, they try and calculate it. The Financial Times came out about a week ago or so they believe that there is each year $400 billion worth of damage done to the economy, the world's economy, through cybersecurity. From a personal point of view, I think they're wildly underestimating it. The damage that a nation state can do to another nation state is measured in trillions in one foul swoop. Goodness knows what the effect, if the Russians actually did attack the DNC in the US and then manipulated that election, how many millions or trillions of dollars have been affected positively and negatively by Trump being there as opposed to Clinton being there. I have no political affiliation, so I don't really care. But the fact is if they have affected it, the effect will be measured in trillions of dollars of difference. That is what we're really talking about. So unfortunately, in the cybersecurity world, we know nothing about how to solve this problem, because all we do is hand it back to you and say, make your password ever longer, change it more frequently, and put lots of stupid characters in it so that you can't remember it. And if you can't remember it, then the hacker can't remember it. It's a very, very silly way of doing it. So I've joined a company relatively recently as chairman. It's really the company that's done it, so I'm reporting on the company as opposed to being responsible for having made it happen. But what they've managed to do is eliminate passwords completely. If there's no password, it can't be hacked. Really kind of tricky. As the hacker looks around for this big central database that he wants to go and hack and do the smash and grab, he can't do it any longer because we've eliminated it completely. I won't bore you with the technology. It's very mathematical, the way it's done. But the beauty of it is for us as individuals, we can use a 4-digit, 5-digit PIN, doesn't matter, and you can use it for everything that you log into. Your bank, your nuclear power station, your nuclear bomb, your wife's shopping. It doesn't matter. You can use the same 4-digit PIN for everything that you do. You can steal my cell phone. I can give you my cell phone, and you can put as much electronics on it as you want to look and see if you can get my username and password. Waste of time, because there is no username and password on it more. You can come to my Tesla car, and you can try and hack your way into my car and disconnect my brake pedal from my brakes and reconnect electronically, reconnect my brake to the accelerator or something like that. You can't do that any longer because my brake is authenticating itself without a password to the actual brakes in the car. The technology is so, because there is no centralized database, there is no central authority that you can go and hack or bribe to give you the information, because, again, it doesn't exist. It takes away the two major sources of risk of technical adjustment or technical approach, or the insider doing it has gone completely. As a consequence, we're now running around the banks of the world. The banks are very keen. There's a special regulation called PSD2 here in Europe, which says that the two-factor authentication that we've been using over SMS phones doesn't work anymore, is no longer secure or considered secure. It's never been secure, remember. Now the government thinks it's not secure. As a consequence, all the European banks are now having to change what they do. And this is the opportunity for my company in financial services. Name the big banks. We're in one project or another doing security for both their internal systems and for their external consumer-facing systems. Finally, to finish off on the financial industry, the last thing we're doing, you may have read that SWIFT has been hacked as a mechanism. SWIFT is the money transfer mechanism that banks use amongst each other. It was hacked by the NSA several years ago. It came out actually about 6 months ago that the NSA had hacked it. We are rewriting the SWIFT system without passwords. We're introducing that into a bank in South Africa as the first side. So please, if you take anything away from what I say, take away fear and worry. Cybersecurity is here, it's big, and it's going to get a lot worse in the next year or two. Thank you very much.
Thanks, Chris. That's a game changer in the world of cyber authentication, without any question in my mind. And I want to introduce a gentleman called Farid Haque, who I first met a few years ago at Google Campus, I think. And we've sort of stayed in touch ever since. Farid knows a lot about Islamic finance, unlike me. I've been keeping my eye on a company he is creating called AssetVault, which isn't the first company in the space he's occupying. Guess what? That's a good thing. This is not a pioneer. This is potentially a game changer. It's got some great insights. It speaks to one of the great issues insurance companies have. And so without further ado, Farid, over to you.
Good afternoon, everybody. Assalamu alaikum. It's always difficult speaking after lunch, so I'm going to try and keep this hopefully to the point and short and sweet. Let's see if we can get this working. Is this actually working? Not yet. No. Tech support? Okay. Okay, there we go. Perfect. Thank you so much. All right, everybody. Good afternoon again. My name is Farid Haque. I'm the co-founder and chief operating officer for a company called AssetVault. We are a Techstars company, and for those of you that don't know what Techstars is one of the world's leading technology accelerators. They help finance and support the growth of very, very young companies like ours who are trying to do something that, as Mike describes, it could be game-changing. And what we are trying to do is actually, we're trying to address a very specific couple of problems. And those problems largely have to do with the fact that a large number of us have over time developed a great deal of assets. And with the growth of those assets, you get to see that it is more and more difficult to manage them. So what we are trying to do in the very, very first instance is help people get control of their assets. Now, I've got a slide up here that talks a little bit about the FCA sandbox. Can I just see a show of hands for who knows what the FCA sandbox is? Anybody? No? Okay, so a couple of you do. So let me just introduce what that is. So the FCA sandbox is the UK regulators' approach to actually recognizing some of the most innovative companies, people that are doing things that haven't been done the way they're being done before. So what they do is every year they identify, and this has only been going on for 2 years, so we're in the second batch now. They identify a handful of companies that are doing something that needs regulatory permission, but experiment in what they call the sandbox and do it in a safe way with their oversight. And we're very proud to announce that we are in that batch of innovative companies, which was just literally announced a couple of weeks back. So I was mentioning that we're here to solve a very specific couple of problems. And the way my co-founder and CEO Vishnu likes to describe it is we do 3 things. We help catalog assets, we help protect and secure them, and we help customers unlock the value of those assets. Now, I'm just going to talk very, very briefly to how we catalog. I mean, how many of you keep a list of your assets in a spreadsheet somewhere? Someone? Anybody? Keep a list of their assets? I mean, I used to. So, we're talking, and when I say assets, I'm talking about land, bank accounts, perhaps passwords, but not all passwords are digital for those of you that have locks and combination locks. And there's a lot of passwords that are never going to go away, guys. That's the reality, unfortunately. So, especially if you come from our part of the world. So if any of you have owned ever a Godrej safe, that safe isn't going to get chucked away. It's going to stay probably with your family for a long time to come. So I think that cataloging assets is something that's becoming increasingly important. And what we do with that catalog is actually allow you to, for the first time ever, get a complete view on what the worth of those assets is in one place. Now, imagine this. What banks and financial services institutions have been really good at over the last number of years is allowing you to have a view of your liquid financial wealth. Sometimes they let you see your non-liquid wealth as long as you're holding a mortgage with them as well. Now, what we've done is we've come along and we said, it doesn't matter who you bank with. It doesn't matter who you have an insurance policy with. It doesn't matter where your car is in the world or where your money is in the world. You can keep a record of it in one place. Now, this is really important for a number of reasons. And the biggest reason we identified was the problem of legacy. So when families, this generation is about to see a transfer of over $30 trillion worth of assets from one generation to the other. In order for that transition to be seamless, people need to have wills. Take a wild guess how many people have wills, and up-to-date wills, not just a will. And I mean, you can ask yourself that question, hand on your heart, how many of you have an actual will, or how many of you actually know that your parents have a will that actually has recorded all of their assets and that those are going to come safely to you. Enter AssetVault. AssetVault came up with the e-will, which was the first ever dynamic and digital e-will. We own the trademark for that as well as a few patents that are pending. And what we try and do is link the old world will with a new world dynamic asset catalog. And therefore, your will is always linked to something that is current. Now, this is pretty important. Now, this is important for a couple different industries. This is important for banking. I used to be head of strategy at Barclays. I know a little bit about banking. And I can tell you that a long time ago, what banks like HSBC used to do is they used to offer a will writing service to their end customers. If you were a premier customer, for example, you'd get an invitation to say, please come on in with your wife, or if you're a lady with your husband, and sit down with us and we will help you make a will. Now, the problem with that is as follows. Number one, with your busy schedule, you have to take out an hour and a half to 2 hours to actually go over to the bank, make this thing, pay them some money, and actually come back. So what we're doing is we're not taking away the pay the money bit. Unfortunately, you still got to pay for value. But what we are doing is we're making it super, super simple for people to do that when they want to do it. So goodbye office hours. You can do this in the comfort of your home whenever you want to, and easily, cheaply, quicker, and better. So that's what we mean by protect and secure. So all of those assets that you just recorded, you'd be able to put them in a digital will. And then I guess the most important part for this audience, we are working in two specific areas of insurance. Number one, life insurance. So we think that Takaful is extremely, extremely important in the future for where we might be going next. And number two, for home and contents. Because guess what? All of those contents that you just recorded on your AssetVault, whether it was that watch that you had got as a wedding present, or whether it was jewelry that somebody has inherited as a result of a wedding, etc., all of that is on the catalog. And thankfully for a lot of insurers, the value is understood and it can be insured with the click of a few buttons. Now, that's the innovation here. The innovation is to catalog and protect things quickly and easily. And then finally, the unlocking the value. This is really where the future comes in, and this is our vision. We've already cataloged over £100 million worth of insurable assets on our platform. And we're very, very proud to be working with Hiscox and Legal & General as two of our partners in this FCA sandbox. What we're doing today is we're looking to basically expand the service into other countries, work with more insurance companies, and of course also innovate in the Islamic insurance space, which we think is fantastic. I just wanted to leave you with a few thoughts on who are our customers, if you were wondering. Actually, our first customer is people like you, people in the insurance companies that are running the insurance companies. Because what we do is, and instead of fighting with insurance companies head-on, we believe that we can add a lot of value. We believe we can be a part of the ecosystem that is swimming around those large insurance companies, enabling them to better monetize and build long-term relationships with their customers. So if you ask me, what is the real problem you're trying to solve for the insurance companies? It's one of engagement. Because, as Mike said, there's very few opportunities to actually engage in insurance. And what we're doing is helping you build a very long lifetime value relationship with the end customer. You can buy insurance from lots of different providers and probably even shop around and change insurance every year. You don't change wills. It's a very long lifetime product. So our end customers are people that could be behavioral. So, for example, a first-time home buyer looking for a mortgage, potentially even an Islamic mortgage, growing families with children. We don't say young families because people are older now as they have children, but growing families is really important. I have 2 children. I know that's the first time I actually really thought about a will was when we had our first daughter, and my wife and I sat down and we said, I think it's time we really did this. And despite 3 separate appointments, we still failed to make a will with the bank. And then finally, retirement and life planning. I mean, how many people within this segment that are ready, that have a lot of assets? And by a lot, guys, I just mean it's not about the value. There are many things that are invaluable. There are things that you just can't put money on. But where are they is the real question we try and answer. Like, how are they being tracked? Whether it's a password to something or whether it's a family heirloom, I think your children and your loved ones deserve that legacy, and that is the problem that we want to help solve. So I've already talked about the engagement gap being a big problem. I think that's very, very solvable. And over here, what I just wanted to sort of end up on was saying that, look, I think that even in the Islamic world of Islamic finance intestacy laws vary by country. So in some Islamic countries, you have very set laws for, who's going to get what. I see a few people laughing because I think people get the joke. There's somebody here from a very famous TV sitcom. If you guys get that, great. If not, start Googling. But the point here is that just like we're making the e-will we've also come up with a digital wasiyat product. We see that being very applicable in countries which are mixed religion, like Malaysia, for example, where people are interested in the e-will, but they also may be interested in e-wasiyat. But equally, in completely Islamic countries like Saudi, the market for this is absolutely enormous. So here's just a sneak peek at what the product looks like, just so that you get an idea. It's very easy to sort of catalog assets. You just pick what you want, in this particular case, property. You take a couple of pictures, you put down where it is. We have an integration with data sources that automatically pick up the value of your property. Now, it's kind of nice to get an email once in a while saying that the property value of your portfolio has gone up. Let's hope it keeps going up. And then, of course, having a look at that overall net worth that I talked about earlier across all of your different asset classes. Now, remember, we're not transactional here in the sense that we're not moving your money. This is just a view-only, read-only view of your asset base. Finally, here I've got a view of the will. You can see this is the first time ever, guys, that a will's been created on a phone. I mean, we talk about these handheld devices, and you guys are absolute legends in what you both have achieved, Mike. But here we're talking about unleashing the value of that computing in your hand to be able to create a will, which is just something that hasn't happened before, and we're really, really excited about that. And then finally, we've got an example of what we're doing here for claims. Digital claims has become a reality. It's something that's much easier than ever before. Again, whether it's Takaful or not, I think the idea is to, one, empower insurance companies with more data than they've ever had before. And that can be done through location, because guess what? Your phones track your location. And also with your permission, of course. And it's you who's actually filling out the claim. But how much easier can it be if the asset is already on the system? How much easier can it be if the proof of purchase is already on the system? We call it one-click claims. Amazon is not going to sue me because it's not one-click purchase. But we think that that's where the future is headed. And I think I don't want to use buzzwords like AI and machine learning. That's a part and parcel of our world. We do it every day. Both Vishnu and I are engineers, and we have a great team from some of the best universities in the world. And I just want to thank the panel and the organizers for inviting us up here and being able to speak. If you guys have any questions, we'd be delighted to take them. Otherwise, thank you so much. Thank you.
Thanks, Farid. So finally, in my little group of companies that I've been working with, I introduce Andy Thomas, who is the founder of a company called KYND, KYND. Andy and I have been friends for many years, and we created a company together a few years ago that was a game changer in the protection of sensitive personal information in a world where that was migrating from your PC to the cloud due to the growth of social networks. That was sold to Experian 5 years ago, believe it or not. And while I've been alternating between the stands and the dugout in the last 5 years, Andy stayed firmly on the pitch and come up with a very interesting game changer in the world of insurance, which I'm sure you'll be interested to hear about.
I will make sure that I keep this short and punchy. Okay. So this is actually the first time that I've ever spoke to any more than 3 people about KYND. So you'll be glad to know. I figured it was safe because if nobody likes it, it doesn't matter. I really appreciate the opportunity to do this. But KYND is something that's been developing with myself and the co-founders for the last few years because we spent a lot of time in the cyberspace, and I know Chris talked about this earlier on. But, I mean, I helped start Garlic in 2007 before the iPhone had been created and just about when Facebook started. So, unfortunately, I'm not that wealthy, but we've been working in cyber for 10 years now. And the thing that keeps coming out at me over the last couple of years is organizations such as yourselves or business owners saying, do you have anything that will help me stay safe or keep my company safe online? And most importantly, that I can understand. There's a whole world of technology being sold to companies for perimeter security and sold to IT departments. Cyber risks are not an IT problem. Cyber risks are a board problem. They need to be treated with the same seriousness as you treat with a financial or legal compliance issue because it's a regulatory and it's a business survival issue now. So that's why we created KYND. over the last few years, we've talked a little bit amongst ourselves and to other audiences like this about something that we call the industrialization of the cyber threat. To Chris's presentation before, the scale of hacking of personal information, of company information, has risen inexorably over the last few years. And one of the fundamental reasons behind that is because you don't have to be that clever to hack a company anymore. When you go home, just Google carding forum or hacking tutorial. There are people buying AdWords on the back of those things, and there are hundreds of smart people in bedrooms who don't have to learn how to hack a computer. They can go and rent a system to hack a computer. DDoS attacks can be rented by the minute, by the hour. If you don't like the shop that you just bought your sandwiches from at lunchtime, you can go and DDoS them off the planet. If you don't like the gaming system that you're using and you just happen to have lost your latest status during the game, you can DDoS it. So this is accessible technology that's being used to cause real business damage. So no wonder that cyber has risen globally from the 15th most scary thing that businesses look at to the 3rd in 4 years. And actually, it's behind business interruption, and the 3rd most significant contributor to business interruption is cyber risks. So outside of business interruption and outside of acts of God, cyber is the next thing you should be worrying about as a company director. So when the original thing with data breaches, and this started in America because of their regulatory environment, people lost customer data and then had to spend money on credit monitoring for those customers to protect them for the next 12 months against the possibility that somebody might use their information. So the tangible losses of breaches were always associated in the public's mind with the cost of providing credit monitoring. And it's never really been possible to get under the covers of any business and say, okay, how much did that really cost you? The other week, the Petya attack, we now get a feeling for how much these things cost. Okay, so this is a piece of malware that spread as a worm, wiped out people's it wasn't encryption, it wasn't ransomware, it was just designed to basically wipe a computer. And it cost Reckitt 112 million quid. Maersk haven't said publicly how much it's cost them yet. Mondelez, well, their growth quarter on quarter went from plus 2% to minus 3%. FedEx haven't said how much it's cost them. So these are real, tangible business impacts of what originally was thought of as just an IT issue. So what causes this risk? When I was young, I used to work for a company called Sun Microsystems, and when I was the 5th employee in the UK of Sun, and I sat down and they gave me a computer with an email address on it, and I've never seen one of them before, and I was lucky enough to work with some very bright engineers who explained to me how the internet works. Now, the internet, in theory, is a very, very elegant system. And Tim designed a net mechanism on top of it to display web pages and all the rest of it. So that there is a very elegant set of protocols that support the internet. Unfortunately, what's happened to it is it's become very successful. And it's buried into everybody's lives. And this ubiquity of this system has now built within it a set of complexities that are hidden from most normal human beings, but actually reflect a situation where we've got billions of internet users. We've got millions of different web domains. We've got thousands of companies providing thousands of different services hosted by hundreds of thousands of different companies and connected to the internet by millions of different ISPs. And a failure or a compromise or a mistake or an error or just stupidity in any of those can cause you £100 million worth of loss. And you don't have it under your control, and there's no way you can have it under your control. So the reality is you're exposed to those sorts of risks as a business. Now, where there's risk, there's then opportunity. So the growth in cyber insurance that we've seen in America and increasingly through London, the market for pure cyber insurance is going to exceed the global marine hull insurance market by 2020. So that's a market that's come from nowhere, and it will be bigger than marine hull in a few years' time. But the challenge with cyber insurance is people are trying to underwrite and manage the risk associated with cyber with the same techniques as you've always used for property or liability insurance. Don't put all my houses on the same earthquake fault. Yeah? Don't let all my ships dock in the same dock at the same time because it might be a typhoon. Now, you're asking yourselves the same questions about cyber, And the process that you're using right now is not fit for purpose. You've got a proposal process that's a paper-based form that the disclosure by the insured is what websites have you got, what possible hosting partners do you use, and do you have these processes in your business, right? Now, the reality is if you stick one more question into that proposal process, the insured will go to the next guy who's not asking one more question. So it's a very, very tight but highly competitive environment. So based upon a piece of paper information, I've then got 100,000 cyber policies. There's people in London who I was with yesterday who've got 400,000 cyber policies. And they go, okay, so what's the accumulation risk in that? What happens if Amazon's Northeast data center breaks down for a day? How many of my insured are going to come to me for business interruption losses, or are going to come to me because they're liable for third-party claims against their policies? Managing that sort of accumulation exposure within a cyber portfolio at the moment is very difficult. So, finally, the last point as well. I've just made myself, because I was reading an article this morning. How many of you within your policy wordings for liability or property or marine specifically exclude cyber? Because the silent, do you guys do? Yeah. Because the silent coverage issue within older policies, as I understand it, is quite explicit, it's an issue that people are starting to tax themselves about. Indeed, the Prudential Regulatory Authority here in the UK said yesterday that you ought to carry out some stress tests associated with it. So KYND is a prototype, okay? It's, we're in the middle of just starting development, and we'll start an early access program probably towards Q4 this year. And what the two prototypes that I can show you some screenshots of today, forgive me, are two versions of KYND. One of them is KYND for any business that wants to understand the cyber risks that face it at that moment in time and what to do about it. And the second version of KYND is KYND for an insurer who has a portfolio of companies that they are insuring against cyber risk. So the business prototype, to protect the innocent, we've run this against real data all the time, so I've changed the company name to protect the innocent. But essentially, this is a screenshot of what we want the KYND dashboard to be. And this is, anybody can look at this and say, first of all, these are all the external services that my company faces to the internet. And against all those services, I've got one red one. I've got a few orange ones, and I've got a lot of green ones. So the one red one is the one that I've got to pay some attention to right now, as a board, as a senior manager. IT, you guys tell me why that's red. If there's a good reason why it's red, then fine. But at least I can ask the question. Underneath that, I've then got the risks that could affect me as a business from an interruption perspective. And we can explain what they are, but you are configured either correctly or incorrectly to minimize your business interruption risks on the internet. We throw in some comparative stuff. Then also, okay, so where are all my services hosted? Who hosts my services? What are they made up of? What software packages am I using? What do I look like to the outside world? The bit I didn't say about this, by the way, is that none of this requires the involvement of the company that we're looking at. So with KYND, I should be able to go into that organization, into that company and go, my company, run me the KYND report, and within a couple of minutes, I get these results back. So I don't have to ask anybody any questions about the company. It just tells me. Some examples of the insurance prototype. So the idea with the insurance prototype is one of our investors gave me 50 companies that they insure and say, tip all those into KYND and tell me what my accumulation risk is to products, to hosters, to ISPs, to a variety of other things. And this is what this is trying to show. And forgive me, these are screenshots, so it's difficult. But essentially, this is a histogram showing all the products that are used within that portfolio of companies, so I can now think about reinsurance. The second point is, where are they hosted? And finally, which of them are sat in which data center for Amazon? So this is some Amazon data centers, Ireland, Northeast Cluster, Seattle, San Francisco. We can tell you what services emerge from what data center for Amazon. Finally, I have some friends, good friends of mine who are in the insurance business, and they spent the entire weekend and most of the following week after the WannaCry outbreak trying to work out which of their customers might be exposed to it. KYND could tell you straight away which of your customers have got any exposure to WannaCry. And I am afraid I know nothing about Takaful. I'm not an Islamic scholar, obviously, but when I looked at the principles of Takaful and the principles of KYND, the two seem to be very closely aligned. The point with KYND is that you use KYND so that you stay safer and those you're connected to and the people that you work with stay safer online. That, to me, sounds very closely aligned to the principles of what you're trying to do. Finally, if anybody wants a report on their organization, if anybody would like a report on the company that they work for, anybody interested, report at KYND.io and we'll get it back to you as soon as we can. And try and explain what it means as well. So thank you very much for your attention.
Waiting for the presentation. Assalamu alaikum. Good afternoon. Just waiting for the presentation to start. I'll talk about a bit about Centegy, what Centegy does, and the emerging technology. How can it help Takaful and insurance companies? How the insurance companies should take advantage of technology, and how can they benefit? Not only they can benefit, but the customers of insurance companies, the Takaful clients that we have, can benefit from that. Guys. What is the objective of emerging technology? How it can help insurance companies? So a bit about the agenda that we have: emerging technology, benefits of leveraging technology. What is intelligent underwriting solution? A bit about Centegy and insurance division. Brief on the systems, what it does and everything. So what is this? What is the objective of technology? It's establishing or giving insurance companies a competitive edge. In this picture, if you see, it's something great about the picture is that not only is Usain Bolt the fastest runner in the world ahead of everyone, but he also has a smile on his face. That's the difference. The smile is not only for him, but all the colleagues, all the people, all the supporters that he have. So it's not just having a smile on the insurance company's face, but the clients of the insurance company. Everyone which is linked to the insurance company, to the Takaful industry, should be happy. What are the benefits of leveraging technology in insurance? Business across life and non-life, significant reduction in cycle time, faster decision makings and increased sales, lower acquisition cost. After everything, there's a standardized processes and underwriting. I'll define that in the next slide. And in the end, it opens up alternative channels, that is mobile phones, mobile apps, and everything that's happening these days. Last year we spoke about robots doing intelligent underwriting, and that there are no more humans needed to do intelligent underwriting. So we continue with that Centegy has built an underwriting solution, which is ability to automatically underwrite substandard policies, where you can have smoking, heart condition, motor accidents, and everything can be automatically adjusted and revamped in your policy automatically without going to an underwriter to do manually things. It has the potential to increase significant throughput to capture new business at point of sale. It is integrated with Banca, mobile app, and policy administration solution, ability to define advanced business rules, which includes questions, requirements, loadings, conditions, and all associated conditions. Automatically request new requirements. A bit about Centegy. We are headquartered in UAE. We have our development center in Pakistan. We are supporting around 85 clients, growing at 35% CAGR, 6.5 million revenues, a team of 250 plus individuals, focused on technology across 3 verticals, which is insurance, sales and distribution, and banking. The software has been designed by a team of actuaries, accountants, and technology experts, offering complete solution for administration, sales, customer engagement, and governance. And we have all the 4 solutions that we have, which is individual life, group life, general, and health solutions. Our solution is implemented in for more than 30 clients across 8 countries since 1985. Experience of 500 plus man years. It's a fully web-based technology and leveraging latest Java technology platform. These are some of the clients that we have: Allianz in UAE, Zimnet, some of the clients that you can see on the screen. As I told you, we have 4 different verticals and solutions that we have: individual life, group life, health, and general. The secret sauce, the capability to problem solve. Any issue can be solved through permutation and combination. It's all about you feed in something and you get output. It's all about going into the technicality of maths, permutations and combinations called solve any problem. So our system has the capability to that. It has a hierarchy of rules and regulations, validations, allows for product complex Takaful and insurance product configuration. Common definitions for administration systems and front-end modules, single source, no duplication, faster speed to market with accuracy, intelligent engine to self-determine application of advanced rules and orders, ability to copy and modify definitions, easily maintaining multiple versions of product, which a lot of insurance companies do need. This is one unique design that we've made. This is the system engine. So the system feeds in information, which is alteration, parameters, and various, parameters, surrender values. A system automatically, using the engine that it has, automatically generates values, which is premium, surrender values, loading, policy document, and any other thing that is needed. System for the future, Centegy has developed a proprietary framework based on open architecture using Java platform, reduces dependency, enables R&D and leveraging of best-class tools, processing and code reuse to further competitive advantage, allows for inherent built-up of system depth and intellectual property, cost-effective, providing flexibility operating system, database, and other latest technology web services. It's designed as a software as a service, fully integrated architecture, capable of operating on a centralized architecture, handling multi-currency, multi-company, multi-language, etc. We've done some next generation thinking, which is leverage mobile apps, as I spoke about, usage-based insurance, which is how much you use. The insurance company will be charging you premium as per the insurance that you've done, or if you're driving safe, they'll give you a discount, or integration with wellness apps, Fitbits, predictive analysis. These are some of the front-end modules that we have, sales tools. And then, as the panel and spoke about, customer engagement. That's very important. We've spoken about, and we've given a presentation last year and the previous year about customer engagement. We have some of the customer engagement tools that we have, which is business intelligence, Mobiz, mobile app, and iPortal. In the end, a brief of our insurance suite that we have, strength of the backbone, plug-and-play integration, enables real-time visibility, omni-channel marketing and sales, and insight into drive strategic decision for competitive advantage. Thank you.
Well, I think the takeaways from this digital world, which Mike has actually alluded to with his panelists, and which Murtaza has brought to an end about the system capabilities the Centegy Technologies offers, I was mulling over whether I should either become a hacker, an extortionist, or should I stay on the side of cybersecurity. All 3 are good professions now as we move forward into the digital age, so we can make our choices. But on a more serious note, I think the common denominator, seems to be, and is definitely going to be, is cybersecurity. We have seen upteen amounts of headline news. Every day we pick up the paper, Either it's about business interruption. Only 3 weeks ago, we had the BA failure because someone switched off or the switch, and apparently it then blew up the whole system for 4 days at the BA, and all the flights were cancelled and caused major disruption. But I mean, the heist which is taking place, whether it is organized by state influences without any names or whether it's organized by individuals from those states, is on the increase. Okay, so we don't need to go to a bank to do a bank robbery. We just simply either annihilate the site of the multinational or we attack it with the ways that was described to you. What it does mean is that I think for the Takaful industry, we now need to think about the positive spin from this whole take. AssetVault, which I found very interesting from Farid, could be one thing, because to be honest with you, all the stuff we do in our daily lives is very fragmented. We have various things we go along in our life cycle. I mean, I like the yacht, but I think I'm far away from buying that yacht at the end of your slide. But I think what we would like to do is to have in one place all that information gathered. And so when we have a claim, we can actually make that claim quickly. Otherwise, we are hunting for invoices required by the insurer, which is a very painful exercise, which I myself have undergone, going back 10 years to find the invoice because the chandelier has crashed, and now we need to find that invoice, for example. Okay, that is a very painful exercise. So I think we need to keep everything in one place. But that begs the question that as information is concentrated, whether it's on the cloud or whether it is on space, is still the issue of security. How secure is this whole thing? We keep talking about cloud computing, and I wanted to ask Mr. Mike and his colleagues, I mean, how secure is the information kept on cloud? Can we have an answer on that? Whoever wants to answer.
You should be frightened.
I know. This is why I'm asking.
The problem is not so much the technology. It's the fact that technology is run by people.
Yeah.
And people are not all good. And people are both deliberately bad, deliberately trying to do something bad with stuff. People are making mistakes. So I think we have to think differently. We have to think about how do we avoid having any centralized data, decentralizing data. If it is logically centralized, so you can access in one place, it needs to be physically decentralized, and the trust required to get into it needs to be decentralized. We should not have to worry about whether Google says this is okay or not, because Google is 150,000 people who have to decide whether it's okay or not. So the thinking, I think, has to be fundamentally different from what we do today.
Farid?
Thank you. I think you're spot on about the fact that we should be afraid, and I think that being afraid should lead to the right behaviors. So I'll answer the question in a couple different ways. One is from the company perspective, again, just building on what my colleague has just talked about, where when you're entrusting your data to a company, I mean, I often try and first think about, well, who is the company? What is the company? Where are they? Where are they based? What trust do you have with that company? And that's one of the reasons, for example, why we partnered up with the likes of Hiscox and Legal in General, because the idea of being a regulated business where my name as a director, I am on the hook, ladies and gentlemen, if something happens to your data, I go to jail. And I think that's really important. There should be accountability for data ownership, and I think certain regulation that's coming into effect next year with GDPR leads a long way towards that, where I think it's going to hold a lot of us who are in financial services technology accountable for that. So people need to take the right steps from a company perspective, but they should also take the right steps from a customer perspective and ask that question, who am I entrusting my data to? If it's not a regulated entity, I would be afraid. I would be very afraid. Then the second thing was about, I think there is no security that is impenetrable. I think that's already been proven. So if anyone makes claims like we are unhackable, or like this is absolutely, this is it, this is nirvana, I think that's, if you'll excuse the expression, that's nonsense, because the reality is that all you can do as a technologist is build layers of security around your technology. And those layers can get penetrated, but then how do you make sure that you do your very best? Again, it's about the company having a security roadmap, continually working with what I would call ethical hackers to hack their own system, understand where the vulnerabilities and weaknesses are, and continually work to engage that. But also there are some simple steps that, again, you guys can take on your end, which is don't keep the same password for everything, for God's sakes. And try and mix that up, change it, force yourself into better behavior. So I think a mix of the right behaviors and hopefully improving technology, like some of our colleagues' technology, will put us in a better place. But by and large, I mean, it's a challenging environment right now.
Any other comments?
One final point is that what chance has anybody got when it comes to Petya, the Petya virus or the WannaCry virus, the profiles of the companies that suffered from that just shows how big of a challenge it is. So is the cloud safe? It's as safe as anywhere else.
Any other comments?
Probably safer than a laptop that you carry around with you. There's one thing I learned: if you lose the physical storage on which your data is held, that's gone. Anybody can penetrate that. So the least safe place is probably your mobile phone. You're much more likely to lose that, followed by a laptop you carry around with you.
So Chris, does that mean that we are now actually coming to a world where the data, rather than being held in a central point, we're going to have to decentralize this data to actually have remedial, shall we say, mitigation against that kind of risk of an attack?
Yeah, you have to think in two levels, I believe. One is the physical side, and the other one is the logical side. Logically, it's got to be held together because you've got to be able to access it. Physically, you don't want it. You want it away, somewhere else. And that's why, and if I can draw in the blockchain into this, and Ethereum, and those kinds of things, that's what's so exciting about those technologies, because they fit exactly that model. I can see logically a transaction. I own that car. I own that piece of property. But physically, that data is dispersed across the whole system. That, to me, is
the distributed
kind of the
ledger
nirvana
processing of a smart contract, for example.
Absolutely. That's the way to go.
Are there any questions from the floor? Because I'm conscious that we are now virtually coming up to the last few minutes of our session, as we just programmed for 75 minutes. We started around 3 o'clock. Now I think we are, or 5 to 3, so now we are virtually up against time. I can see Mr. Randa waving frantically at the other end. Are there any questions from the floor, or you're all getting ready to have... Africa. Okay, you're going to Africa now, so... In that case, I wish to record my appreciation for the eminent panelists that we had, starting with Mike and the team, Farid, Andrew, Chris, and Ali. And thank you very much for your participation. Thank you.